Equity Bank Group has recorded a 25% growth in its profit after tax, with the lender posting a 16 billion shillings net profit for the period ending March 31st. This is up from 12.3 billion shillings recorded in a similar period the previous year. Now, the bank has, however, also seen an increase in bad loans owing to higher interest rates and a tough macroeconomic environment in Kenya and the region. This forced the lender to increase its bad loans provision in the quarter from 3.1 billion shillings to 5.6 billion shillings in anticipation of an elevated non-performing loan ratio. Jimmy Mbogo with the details.
NPLs.
In the first quarter of 2024, growth across Equity Bank subsidiary pushed the lender's net profit up 25% to 16 billion shillings, with customer deposits increasing by 11% to stand at 1.24 trillion shillings. It is these funds that enabled the lender to disburse to customers 779.2 billion shillings in credit, growing its loan book by 3%. Of concern in the quarter, however, is the reduction in trade facilitation that saw the lender reduce trade loans to customers by 10% from 39.4 billion shillings to 35.3 billion shillings. In Kenya, for instance, although customer deposits increased by 13% from 655.5 billion shillings to 740.2 billion shillings, the lender saw a 6% decline in customer loans from 448.9 billion shillings in quarter one of 2023 to 421.6 billion shillings in quarter one of 2024.
People have taken the signaling effect of macroeconomic challenges, high interest rates, high exchange rate, inflation rates, and all these are not good. So we see as if there has been deferment. People has postponed the investment decision, and that explains.
Although the bank has remained optimistic that the challenging macroeconomic environment is past, its non-performing loan ratio rose to 13.2% in quarter one of 2024, up from 9.1% in quarter one of 2023. The corporate sector represented the highest NPL ratio at 19.6%, followed by the MSME sector, which recorded a 13.3%, while retail has a 7.3% NPL ratio. Regionally, Equity Bank Uganda and Equity Bank Kenya had the highest NPL rates at 21.3% and 15.3% respectively.
This challenging environment has almost become normal for equity. Eventually it will become normal for businesses, and they will learn how to operate in challenging, uncertain, difficult, volatile environment. As a result, businesses will normalize. So what we are doing is to support our customers. We think that we'll see the decline on NPLs in the fourth quarter.
Equity Bank Group has further cemented its position as the second largest bank in East Africa in asset base, closing the quarter at 1.7 trillion shillings, up from 1.53 trillion same period last year, with the brand being recognized as the world's second strongest financial brand. As the bank released its quarter one results for 2024, up to 63% of its profit came from its subsidiaries, which are yet to operate optimally, meaning that soon the subsidiaries could be the lifeline for the bank. Jimmy Mbogo, Citizen TV, Nairobi.